Hey folks, and welcome to the Pipnotic Symposium for the 7th of November 2018. Yes, but today we are going to have a look at some pairs. We're going to talk a little bit about trading counter trend. We're going to do an analysis on a few pairs so we can have a couple of levels that we can watch. The rainy season just started here in Indonesia, in Bali, so it's absolutely pouring this morning, so I'm kind of sitting here in wet shorts. It's quite nice where the air gets cleaned and everything's fresh, and it's amazing how this place kind of just gets washed down. You walk down the road and just rivers of rainwater and mud coming down from every direction. It's pretty incredible, and you just kind of wander around in t-shirt and flip-flops, so it's quite nice. It's not like the daunting dark winters in Denmark where it's dark and there's snow and all that other terrible stuff. So it's really nice, very different, but very nice indeed. Okay, so let's just jump straight into this. We are going to have a look at a couple of pairs first, and I marked off this Kiwi American dollar. The American dollar has been really weak, it seems, this past time. Let me have a quick look at the strength, and you can see that it's just tanked here. I don't follow the news so much because I find it a little uninteresting, but there's something going on in the news that's driving the American dollar lower, and last night the Kiwi higher, as you can see. Let me enable this so we can have a look. So you can see in the winners very clearly we have a Kiwi which just took off last night. I'm not sure what that is, but something exploded. And then you can see the American dollar. We're still updating data, just downloading data still. You can see down here we have the American dollar, which is pretty low here. And so so this is why we can see this very clearly in the Kiwi dollar cross. I mean, there's a really big push. And so we have a quick look at that. Let me clear all these off. So the Kiwi, there it is. You can see we had a really big, this is a 4-hour chart, we had a really big run yesterday. A push higher into what? Into some areas that look interesting. I have an order here to sell on this little account here, and you can see that, I mean, price went up to here, and then you ask yourself, well, why did price go there? Well, this is the interesting thing. As we talk about the sell zones and the buy zones, let's have a look at this for a second. We're going to mark off the absolute high, which is right there. We're going to have a look at where that reacted. Look at that. Isn't that pretty amazing? And this is essentially the edge of the sell zone, because price left, and then we had a really big push away, and prior to that release, price went as high as this area here. So this is the edge of the sell zone, so start selling from here above. Again, we have the same thing occurring now. So you have this whole move here is standing on this here, and so you can see that price went down, but prior to this release, which is clearer on the higher time frame, you can see that prior to this big drop off here, price came back up to this level here before it left. And this is kind of also a support becomes resistance scenario as well, and this is just a return to this area here. If you have a look on the daily chart, there's also another area that's even more interesting, and that is this here. How we had price come down, we accumulated, we went down, we went up, and then boom. And so an even better area would be to put something like this. Lots of dogs fighting. Don't know if you guys heard that. Yeah, another thing about Bali, there are bloody dogs everywhere. It's incredible, and some of these dogs you see, and they have absolutely no fur on their bodies, and their skin is like leather. And the locals, the Balinese, they say that a dog that is really worn out like that is actually a blessing, because that particular dog, who's incredibly worn out, has actually received the wrath that is protecting us from really, really bad things to come. Because the reason they're worn out is because they endured a lot of pain and a lot of suffering from previous lives, and so this is actually kind of a result of that. And I think that's really, really interesting. So whenever you see a dog that has no fur and has skin like leather and really, really worn out, even young dogs, puppies can look like this. It's because that they've taken kind of a tough line on our behalf. So we have to thank them for that. And there are quite a lot of those, and there are just dogs everywhere. It's amazing. Anyway. Sorry, distraction. But here we have this price came down, accumulated, left, we poked into it, and then boom. And I really like this release, so this is actually a better price for me to sell. And this is also kind of down, up, down. So this is kind of the turning point here, and I find this pretty interesting. Maybe this looks interesting on the monthly chart. Not so much. So kind of like the lower end of this. On the weekly chart, it's probably going to be a little clearer, where we have how price came down, it went up, it came down, accumulated, and then dumped. And this is kind of like how price, the candle that left, what's the highest it went before the release? Well, it went to, let's have a look. Oops. It went to this level here. So we're just getting in just below that, a couple of pips. I think that's pretty interesting. So we'll leave that on there. Okay, so that's what all these balls here. So that's what we're looking for. Delete all this crap. Good. Boom. So that's what we're looking for there. But you can see really clearly that and we had a huge push north on the Kiwi. I mean, this is a weekly chart, and look, boom, boom, and then you ask yourself, well, why is it doing that? Let's have a look why it's doing that. And again, let me move to the proper screen. You can have a look. You can see that this is the low. Go back. Why? Well, this looks like price came down. It came up. It came down. It left. It went down to this level, and then it left. So let's have a look inside there. On the daily chart, we don't have to go any smaller than that. You could probably see why this would be an interesting area. Let's mark it off even more precisely. And we'll scroll to the left and have a butcher's. And you can see it here. This is essentially like a pretty messy area, but we had like price came down, we went up, we accumulated, and then we went up. So price left here. So essentially we're looking for the lowest point prior to the release. And here we have the release, and the lowest point is here, as you can see just here. So this is kind of the test, this pullback into the parent, child, parent, okay? So, I mean, it looks like magic, but it isn't. It's pretty simple. Simple to understand, difficult to implement, execute. Well, more so. Of course, this is pretty interesting. I think let's go to a 2 period. Look and have a quick look here. Then you can see that, I mean, the Kiwi is racing higher. It's going to go on, oops, it's going to go on this time frame, the big one. You can see, if we start on the weekly, have a look what's going on. What do we have? We had a downtrend, we had an uptrend. Well, you can see the price we have a high here, a lower high here, we have another one here. We can just mark these off. Got another one there. That's pretty much the extent of that. So what we could do is we could connect this one and go down. Oh, sorry, still using my bamboo table. We'll just do that using this. We go from here to here. So price is moving down. You can see we're cutting through. And we're starting to cut through this trend line. But if you look here, I mean, a little bit closer, I mean, that's kind of a messy one. Let's find something that's clearer. First of all, let's draw these. So we have okay, so these are actually the last two. Here we have the low, so we'll be connecting these two. So let's just do that. Zoom in more. This is a pretty clear swing. this one is lower than this one, and when price left here it went below this, so the trend line will be looking like this. And now it's broken, and you say, wow, what area of demand broke that? Well, let's have a look. You can't really see that on this time frame, so we're going to go to the daily chart and have a look, and you can see it actually happen from here. So you ask yourself the question, where did price release from? Let's put these correct. Let's mark that off. And with this is where price left from. You can see big one here. So we're just going to eyeball it for now. We're just going to go like this. Remove that. Come on, trend line, go away. I'll go to the small time frame, 4 hour, and have a look. What is that? Well, this is what we have. Something like that. Prime market off like that. So this is what we have. It's quite a lot of accumulation there, which I don't like. A lot of accumulation, but I mean, this is where it left from. So this is essentially the beginning of the buy zone for this area of demand. But what I'll do, because it's a little bit too messy, I would continue to mark the lows here. And this indicator, this dotted one, it's nothing. It's just a swing. It's just a kind of a swing point indicator. So it's just like the fractals one. It's nothing, not doing anything interesting really. Let's go to the hourly chart and have a look and see what price pulled into. What did it pull into? It pulled into this, which is yeah, I mean, price left. We have this one here, so we can mark off these. Mark off this one here. Looking like that. We have another one down here. We have another one down here. These are the ones I put in the forum. So let's have a closer look at these. Let's look at the first one. We'll go to the 15-minute chart. Scroll back. What are we looking at? Well, here, where's the release? Here, what's the lowest point it went to before it left? Here. So this is the demand. This is a child. So this is beginning of the buy zone for this demand. What do we have here? We have the release. We have the lowest pullback, which is here, which is going to be like some 5-minute area, I think. Let's have a look, maybe. Let's see if I got enough data there. Hello, cat. The cats have moved into our house, by the way. Lots of that going on. Here we are. See very clearly, like this. So that would be the beginning of the buy zone there. And we have this one here. What I normally do is I double up the size of the area for my stops. So if this is a 5 pip area, then I'll have a 10 pip. Sorry, if it's a 5 pip area, the whole area will be 2 times that, so 10 pips. So if we have a look at this one here, what do we have? 5-minute, messy. No, I would probably go down here because this is just way too not doing anything. So I wouldn't target anything here because too much agreement. So what you could do is you could do something like that, like the lows, but I don't really like anything down here, so I would, yeah, these are all very mediocre, but if we are forcing something, I'm not saying you should trade these, I'm saying you should mark them off and watch price react to these levels. I think we have maybe something that looks like this. You can see here, price went up, it came down, and then left, so ideally we're going like that. This is a tiny one, a couple of pips, double it like that. So mark those off and have a look, and I'll put the price levels on there so you can watch. So these are the levels here. You can pause the film and write these down. Don't trade them, just mark them off like that, and then you can have a look and see what price does when it gets to those. Good. Right, let's apply the template, and now let's go to the 1 period. See what I got here. So I'm setting the greater period multipliers to -1 and 0. So we're going to look at the current and the current -1. Good. So we got that. Actually doesn't look like it's even enabled. We'll enable that. Enable. Boom. Boom. Like so. Cool. Now we're going to start drawing levels. We have something up here. Good. Let's go to the excuse me. Okay, start on the weekly chart. Matter of fact, we're going to remove all of these indicators. So we have to do this stuff ourselves. Good. No help. Cool. So what do we have going on? Well, first of all, we need to identify a trend. So we look for the two most recent swing points. I'm just going to draw these in. You don't have to be anal about it, but you have to be just clear. I mean, here we have, these are pretty good. We're on the weekly charts. We've got one here, here. That's what we're doing. So you look at the most recent ones, two most recent ones, because you need to find a trend line that's moving higher or moving lower. And you can see this one, this is the previous high. Here we have another one, and here we have a low, but this one is higher than this one, so that's no good. So we look at the two most recent low. We have this one, we have this one, and this one is higher than this one, so we can't do anything there. So you can't actually draw a trend line on this yet. So go to the bigger time frame and have a look. What can we do there? Well, here you can't really do anything either because you have lower, lower, higher, higher. So there's actually nothing to do. So we're actually waiting for the volcano to erupt because we have like a pennant formation. So price is going like this, boom, it's moving sideways, and this is kind of a bullish pattern, and kind of expecting price to kind of do this essentially. So price is kind of squeezing, and it'll pop out typically north because the period before was a bullish run like that. And I don't use these chart patterns at all, it's just observation. You can read up on those. I don't know a whole lot about them, so I won't go into any real detail there. But that's what we can see there. What you can see, I mean, it comes up pretty clearly. We have this. Oops, wrong thing. And we have this. Okay, I think we can all agree that we've got a trend line that looks like that. This is on the weekly chart. Just going to do that quickly. We're going to find that and draw it. And this is one we can see here. We have a high, low, high, low. So we're going to draw that off. Like so. And then we have the this trend line is broken. What area of demand broke the trend line? Well, we have this huge mess. So what we do have is this origin of this move. This origin, this move here. Ugly line. Less ugly line. So we have that. You say, where does it originate from? It originates from here. And so price is moving higher. Is it looking strong or weak? Looking pretty weak because you see we have efficient price movement. See how price is kind of like moving pretty efficiently. So the imbalance starts here. This is the imbalance. And so you ask yourself, where has price retraced to previously? And it's retraced to this area here. Okay, so this and down is interesting for us to begin to buy. Let's go down to the smaller time frame and have a look. What do we have? We have this. So this is the beginning of the buy zone. Then you want to look for these candles that leave, and you want to look to the beginning, sorry, the lowest retracement back to an area. This is what we have here. So this is interesting. You don't want to buy for a price any more expensive than this. This is the absolute most expensive price you'd want to pay for this. Of course, we're on big time frames, so you can obviously do what you want on the small time frames. It's going to be different, but this is what we're looking at here. And so here we want to backtrack a little and have a closer look. And you can see we have this, and on the daily time frame we have this, and we have this. So what I'm going to do, I hope that's clear. So I'm going to go like this, mark off this to here, and I'm going to mark off this to here. Remove these. Then we're going to go and have a look inside these, and we're going to have a look below this level. So we'll mark this one off. We're going to go to the weekly chart so we know that it's the weekly pullback. It's going to go like this. Good. So now we go to the 4 hour. Scroll back. Have a look. What do we have? So price reacted to... What did we react at? Kind of the... I don't know if you can argue it's kind of reacting off the highs here. So price is kind of like went down, it kind of accumulated here and then popped through, and price kind of reacted to that level. So this is probably a huge accumulation. Alright, sorry about that, the phone rang. Okay, where were we? Here we are. So price came back to this base, tested and left. So you can see that, I mean, price left nicely from here, but it's not leaving very nicely here. And you can see actually we're wriggling. We have a lot of white candles, so price is wriggling up like this, and we've reached a high point here, as you can see, and then price kind of dumped. Now we're kind of wriggling higher. So difficult to say what's going to happen now. But what we do have this down here. So let's have a closer look inside there. Okay. So we have this here. So we have the candle that left. You can see the candle that left. So you find the deepest retracement into that area. I'm gonna remove this. Not that line. I'm gonna move this down. You can see we had a retracement down to this area here. Go to the 4 hour and find out what that is. You can see that this is reacting to this, which is reacting to this, so this is messy, so you want to look lower. Look lower. This is still messy. We have this. This looks okay. This looks better because this is below this mess, and we had push down to here, and then reaction, and then price left. So this is interesting, simply looking at the way price released. So what we could do is we could take this and mark this off like this. So we'll refine that. We'll take double the size. Then notice that this is a reaction to this. So this is actually the area that we're interested in. We're going to mark off from the low to here. And then below that, we have this. Oops. But in here, we have a pullback to here, and essentially a pullback to here. Price went up, came down, and then went up like so. So we need to go smaller to have a look. Good, so you can see this one here, pull back to here, double up like that. That's what we have here. And here we have pullbacks down to this level here, which is pretty clear. So we can actually adjust that to this. Double that up for your stop. Oops. Cool. So that's what we have for these two. So we have this one here, and this is interesting. This one here because price left from here. This is interesting because this is where from this area here, this is where price moved away from. But looking at this, this is not very beautiful. So what I'd do is I'd mark off the lows, and I'd want to look left and see what we're reacting on, because we're clearly reacting on something. This just looks like accumulation from a historical price level. Let's see if I can find it. Okay, I couldn't do it on the hourly chart, there wasn't enough data, but you can see it here very clearly on the monthly chart, how we went to this area of demand just here. So this is interesting, because this is what price reacted at, and now we're poking further north from that. But if you look at this, and considering the depth of the curve, I mean, this is high up. Trading up here in these areas is not a good idea, and there's nothing here to look at. So I think the takeaway from this pair is it looks a little bit messy, and that you should not start to buy until you start getting below the 108 area. And we're quite a few hundred pips away from that. Depending what happens here, if we manage to move above this high here, that would be nice, because then we'd be able to draw an upward sloping trend line that would look like this, like so, which would be great, because then you can start to look for areas of demand in this area that took out these micro supply areas up here. So just keep your eye on that. Also interest rate swap differentials, they are long on this pair as well. So just keep an eye on that. So I got a bit distracted there on these telephone calls. My Indonesian is not up to par, so I was getting every 13th word that this gentleman was saying to me. Good. Okay, let's move on to another topic, which was trading counter trend. So what do you do trading counter trend? Can you? Yes, you can. You can certainly trade counter trend. The reason I don't like to trade counter trend too much is because it requires a different kind of trade management, and I like to be a little bit more relaxed in relation to managing trades, and so I like to put them on and like to leave them. Let's have a look at something. Okay, let's have a look at the weekly chart. What are we doing? Where are the flows? So currently we have what's moving price. We have a high, low. We have this high, low. Price broke. What area of demand broke this trend line? Look for the release. It's here. So this is the area of demand. Make twice as big, like so. It's doing that. Price tested it. Now we're moving high. So this is an important area of demand for us, but we can't do this until price does this, moves above here. And this is really standard trend line drawing theory. So we can't do that yet. So the trend line is still like this, because essentially what we're doing is we are in a bearish consolidation. We're simply having a breather from this from the selling. We broke a trend line. We established an area of demand, which is good, and now we're wriggling higher from that. And so that's what we have on this one here. So the trend would be to sell. So the idea would be that we would want to sell on this pair. But you can see that going counter trend, which is buying, does not look like a bad idea either, because we can see precisely this going on here. We also have this area of demand, which has been tested. Price has departed. We moved above this high and consumed this area of supply. So this is very, very good, and this is the one that did it. But essentially we want price to move above here before we have a bullish bias on the pound Japanese yen. But so the trend would be to, because we're in consolidation, it would essentially be to sell at the extremes. So look at the kind of the left above price and the deepest pullback. So this is the edge of the area. So we have this here. This is like an area to sell, and to buy would be down here. And so we have to have a look in this area, in this leg here, this move away from this area of demand, to have a closer look. So we go on the daily chart, have a look. We can see that I gotta remove these so it's clearer. Right, we go like this, and we need trend lines. Where are our trend lines? What can we draw? You can see that we have, what do we have? We need the clear ones. We have this to here, to here, to here. I'm not going to do this. This is messy. I'm just going to go to here. Okay. So this is what we have. So you look at the two most recent valid swing points. We have this one and this one, and we have this one and this one. And so these are the ones that we can connect. So we'd be looking at this. And we have we were in an uptrend, but now price broke down. We broke market structure, the origin of which is somewhere up in here. So we have to go in here and have a look for the area of supply that did this. So what we need to do is we need to look for the area that left, and this is really messy, and I don't like this at all, so I would probably immediately, without doing anything else, mark off the highs and look higher, because this is just too much accumulation. When I say too much accumulation, I mean that price is in agreement here, so there's no imbalance in supply and demand. Price is happy moving sideways. So this tells me that there's nothing here to stop price from going further north. So I'm going to mark that off, and I'm going to go left. I can say, what do we have? We have this here. This is really nice because we have this. Before I do that, look at the look at the candle to the left. It's this one here. We have the area of supply. The candle to the left is here. So what's the candle that retraced the deepest? It's this one here. This is the one that left accumulation, this supply. So we're going to go like this, and we're going to mark that off. You know, I'm just going to put a box around it so I can find it, and we're going to go to the 4-hour chart and have a look and see what that looks like on the smaller time frames. So here we have it. See, this is what we have. So price went up, came down, and it left. So this is the beginning of the sell zone. But when we go to this time frame, you can see that, well, actually we can see that this is higher than this high. So we want to have a look in here. So I'm going to mark this off like this. I can mark it off like that because this is the area there. I'm going to go to the hourly chart, do the same thing. Find it now. Sorry if you're getting car sickness watching this. Okay, so we still can see nothing, so we've got to go to smaller time frames. Okay, found it. You can see that, I mean, it keeps going up. Here we had another one. Here's the edge. So this, we're on the 30-minute chart. This is a weekly area, and price left from this low here. So this will be interesting to see what happens when price gets to the 151.32. We want to now find the area. We want to find valid opposing areas of supply and demand so that we can find out what area of supply took out the demand down here. So I'm going to zoom out a little bit, and I'm going to look for that. Okay, so what do we have? We had a nice reaction here. Which is in here. So this is a child, the parent's down here. This has been tested once, it held, and price came down, and now it's gone. And this area of supply took out this demand, the one we just drew. So I'm going to move this one above, because it's something in here. Zoom in a little, and see, well, there's clearly something in here, and because this pin bar right here moved up like this, this is telling me where the retracement moved from. But if you look above, you can see that we have this nice push lower. So we had a lot of we had a liquidity void, price jumped down, and then the orders began to move into the market from about here. And so this is the beginning of the sell, and it goes up to the top here, which essentially gets pretty close to this major kind of swing point here. So we can have a look from here. This is pretty nice because price came down, we accumulated, and then we dropped. So we have this below price, and you also have the edge here, which I think that you should mark off. So mark this area off here, from here to the high of the deepest pullback, like so, and watch that and see what happens. We're not that far from it. We're only a couple hundred pips, so that's that'll be there in a couple of days. So price will probably move up into this area and try and find the thick liquidity, which is going to be probably on the other side of this rectangle, which is here. And in order to cap the selling, it's probably going to have to move up into here, which is where you have the volume, and then a move away from there. So it'll be very, very interesting. Okay, but I mean, counter trend trading you can do all day long if you know what the trend is on the time frame that you're trading, and it can be quite challenging, because if we look at another pair, let's just go over here and we'll put the template on. And so what's going on here? Well, you can see that we had a high, low, we had a low that is higher than the previous, but we didn't really get any trading above there. We had a price move through it, but we didn't have any, the price didn't hold above that area. Ideally, I like to see closes above these highs, which we didn't see. We just saw a deep retracement and then a pull away from there. And so I'm going to have to go to the bigger time frame to find the trend, and you can see here the trend is very clearly down. We have a high, we have a low, we had the low, which is here. So we had market structure tested, we had trend line, this area of supply broke market structure, and this is where price is coming to. It's coming back to the origin of which is where? Is here. We had the big push away, the deepest retracement prior to that is here. So this is where the sell zone starts. I'm going to remove this. Bye-bye, Selamat pagi. And so now price is probably going to make its way up to there, to the 1500 area, and then move lower from there. What you have to keep in mind is that we have these areas close to each other. We have a lot of kind of accumulation, selling, accumulation, selling, accumulation, selling. So price is pretty extended here, and we're reacting at demand, and so we have demand below price, which is kind of a blow. If we're looking at this, for example, and this was kind of taken out, and this was located somewhere in here, this would be great, because there would be no demand below price. Then we'd have to look much further back in time to find something, and the sentiment since then could very much have changed. And so we have to focus on what we can see here and now, and we can see that we have a pretty clear pattern here. The pattern being this: price came down, accumulated, left, pulled back, and then left. So we have demand from this area here. So this is going to be somewhere price is going to have to move through, and it looks like a pretty decent area, because we managed to move through this micro supply just here. So price came down, it went up, we managed to move through above this high, and so on the 4-hour chart we have an uptrend because of this. So you can see very clearly we got this, we have this, so price is moving higher, and we're reacting this 4-hour area of supply to the pip. And so on the daily chart, if you're going to trade counter trend, well, then you would be buying, because we are in the downtrend according to the trend line. We need trend line, we need this market structure to fail, so we need price to move through this, accumulate and consume this or this, in order for us to draw an upward sloping trend line on the daily chart. So the counter trend here would be to buy, and that's completely fine. You can buy, but you just have to be, let me remove that. You just have to be aware of where these opposing areas are that are going to give us some trouble, because we have swaps are negative, and you can really see if you're swap long, you're going to be paying $10 per standard lot, which is quite a lot. So when price comes up here, you want to be out of this trade, because there's a higher likelihood that this trend is going to continue once price pokes back into here, because we have this short bias. So just be careful. So we go to the hourly chart, we'll find these areas that are interesting to us. So we had a nice reaction here. We have this down here, So we had these candles, which one left? This one did. The deepest retracement to it is here. Price missed it before a little bit. And we have this one here. So this is interesting to us from the 113.50. You can see we have another wick here. So this is probably a micro parent, and this is the child. So if you like, you can just mark it off like that, so you get both of them. Now this would be an interesting area, also because price has not quite been back there. Keep in mind that this is looking very bullish. We're poking to this hourly supply, which is the micro area nested within this 4-hour area, and price reacted very strongly. And we are also getting some hourly market structure failure by the looks of it. How we have, we're about to, we have a low to another low, and price is kind of looking to break through that at supply. What does that mean? Well, that means that we're going to have to look higher for supply. This could be, let me remove these so it's clearer. We're going to have to identify supply here, because this is where we're going to want to get out of the trade. And this right here, this could be a continuation pattern forming. So assuming we did get into here, if this price does move down, which looks like it might, we want to be out of the trade before here. So we want to make sure the risk reward is okay. And this is looking pretty strong, so I'd be a little bit cautious about going buying into this at the moment. You can see that we're really racing, but if price manages to move down here inefficiently, this would be an okay place to buy. Alternatively, on this time frame, you can see we came up, we went up, we came down, and this is where price left from. So make sure that you're finding the parents, and we have a nice fresh area below that, which is down here. I'll take that one as well. We'll take off the whole area. We have quite a few nested areas here. We have the parent, child, and older sibling here. This is where nice, because this is where price left from, but we're probably going to move down to something like this. I think here, down to the 113.14 area. Yes, let's keep that in mind, because this is pretty far away, so there's good risk reward should you choose to buy here. But I don't like this. I don't like, you see all these wicks lower. This is telling me go lower. You want to see really forceful pushes higher, because you can see even in this one here we had a nice push higher. We had these wicks. Have wicks. I mean, essentially, where do we get the biggest response? When we got it below this, so we had to go down here. If you keep going, you can see we have, I mean, where's the candle that left? It's kind of this one here or this one here. So let's just go to the first one. And this is pretty much where price came to, almost to the pip. This candle here, this is one that left. You can see it left here. And this is where price came to. And so you essentially have to keep doing that. And if there's no clarity on the time frame you're looking at, you have to go to a smaller time frame, because this is going to show you where the real fine details are. They're going to help you make much better trading decisions. So this is what we have here. Counter trend is to buy. So if it's counter trend, you want to be looking low, and also looking here. I mean, when price is moving down, like this, I mean, it's dangerous to look to these previous areas here for demand, because you need to be focusing on the leg that price moved through. So this is just liquidity being consumed. So looking at this is kind of a dangerous one. I don't know if that looks like a crossbone. Essentially, you need to be looking over here for these areas of true demand, and we can see they're starting from around here. And if we have a look, just have something to work with, we have a look at the push away. Just going to clean everything off here. We have a look. Boom. We have this here. You see this is a candle that went away, and this is the pullback. We go to the 4-hour. Oops. Go and have a look. There it is. And so this is the pullback. And so, I mean, yeah, the indicator is pretty much telling you where you need to start looking. This is where we had a long period of accumulation to do what? To push price higher. So you need to be looking down here for a bounce, because this is where this really nice price moved away. And of course you could keep going on forever and ever and ever and ever and ever, but you don't need to do that. Otherwise, if you do, you're never going to get in any trades. So you have to focus on where price left from and where the origin of that move was. And so the origin of this move is exactly where the indicator has drawn it. So you have it from here. So this is the area of accumulation that is interesting for us to consider here. Because when price, we have this, when price came back to down here, did it leave? It didn't. It did not leave. It moved sideways, kind of moved lower, kind of kept trying to kind of find liquidity by moving down. And this is when you're probably going to see a kind of divergence, kind of an oscillator. See how kind of price is moving lower here. We're getting these lower lows, but the oscillator is going to be doing something like this, which is showing you kind of a negative divergence. So this is what we're seeing here. And so the orders kept piling in, and then it left once price managed to move above here. So we have market structure failure as well. We have resistance. Price cut through it. And this is the origin of this move. This is a small pool of liquidity just down here. So we'll leave that on, and we'll see what happens once price returns back to that level. Good. It's just a nice area as well. I think on the daily chart, we have this area here. Price fed into it once, twice, and the second time we managed to leave. And so on the different time frame, of course, you could look into this area as well, and maybe look a little bit lower. See, this is where these two came to. Mark that off and target that as an entry. But this is, of course, on the daily time frame. So this is maybe something, a price level that price will gravitate to when it comes back some stage, which it likely will. Good. Well, that was an awful lot of jumping all over the place, but I hope that my rambling provided a little bit of insight. Essentially, I think the takeaway for this is you have to look, you have to find places that price has not been in order to start buying and selling. So you want to be looking for those pullbacks. And if you're looking to do that in a price move like that, in contrast to a price move like this where we have a very, very clear turning point, if you're looking in this piece here, well, then you have to be going down to the small time frames and look for those pullbacks, because these are telling you where the edges of these bearish liquidity are located in the form of continuation patterns or micro continuation patterns. It's a bit easier when you get down here, because you can, price will come down, it'll go up, it'll pull back, and then it'll leave. Okay, and so this is just really, really nice, and this is typically located at the bottom of a swing point on a smaller time frame. Then your stop goes quite a bit further down, so there's a lot of protection for your stop should price decide to come and poke through it to find the even fresh liquidity, which is below this, and continue higher from there. Okay, so this is higher risk and this is lower risk. And this is also why you need to be focusing on a kind of a deep retracement. Trading up here is very high risk. So if you want to scale this, you could say this is high risk. I could do this. This is like 0% probability, and this is nothing's 100%, but this is like, I don't know, your 70% probability that the trader work out the further you come to the origin of a move. And if these are overlapping on, for example, let's say this is a weekly. You know what? I'm going to go one better. I can say this is a monthly. So if price has done this, and our price is coming up to this on the monthly, and on the weekly, we have the same thing going on where price is coming up like that and reaching this area here. And on the daily, maybe price has already entered the area, now it's leaving. You want to find that pullback and target that for your entry as it leaves, or that area of supply that is located within this monthly, in this weekly, in this daily. And you can go all the way down to the 1 hour chart, and you'll see the same thing happening, but instead of it looking like this or like this, it'll look like we'll have the area here, and price will be moving into the area for days, hours, like this. Then you might think, like, what the hell's going on? What's this? This is liquidity being consumed to do what? Well, if you look to the monthly and the weekly, to more than likely move lower. And so this is when you can trade these 1 hour areas with confidence, when you know that they are lining up beautifully with these monthly and these weekly areas of supply. Because if you're trading only 1 hour areas of supply and demand, then maybe you're looking to sell here on the hourly chart, which in relation to the monthly chart is just in the middle of a move higher. Then you're gonna get stopped out pretty quickly. And so it's just a super good idea to ensure that you're focusing on what the major flows are doing. And this is why I always ask myself, bamboo table, what is driving price? This is really important to know. And you're not going to get the answer to this question on the 1 hour. You're going to get it on the weekly and up. Okay, so just keep that in mind, and I think you'll be in good shape. Right, this is just under an hour. I'm gonna finish this off now. If you have any questions, please put them in the forum, and we can discuss this information. And if you have any anything else you want me to cover in another symposium, please put them in the symposiums section. And Paul, thank you very, very much for your question about counter trend trading. I kind of went all over the place, and I apologize for that, but I hope there's maybe a takeaway that's useful. I often kind of go off on a tangent sometimes, but I hope this was useful in some way. If not, let me know, and I'll try to be more specific and kind of focus on a small piece instead of so much material in a future symposium. Good. Logging off for now. Have a cracking day, and I will speak to you all in the very near future. Thank you for watching.